Welcome back to the channel, Crypto Trend Trader, with a quick update on Bitcoin. Before we get started, I'd like to remind you it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Here we got Bitcoin daily. I'm on Coinbase chart. We're coming up on the monthly close. I told you last week that we were expecting volatility leading up to the monthly close and afterwards, as this is not only the monthly and the quarter, but it's actually the half, and we can expect quite a bit of volatility based on that. We're coming into basically a decision point on top of that, and essentially I'm going to turn off the moving or the drawing tools for a minute and just look at the moving averages. We had spoken about this in a previous video when we got the cross was back here the beginning of April to the upside between the red and yellow moving average, our short-term moving average, and our second shortest moving average, the 8 and the 21. And then we got the cross back negative on the 16th of June. And then we attempted to get back above, could not sustain it, put in our third consecutive lower high. And then now we're proceeding to put in consecutive lower low on candle closes. It looks like we're attempting to push back up, but now at this point in time we're below the 50 and 55 moving averages, the 8 and 21 moving average, and basically what saved us was the 89, which we had spoken about. Came down, found support on the 89. We would expect to find resistance on this cluster, but once again could get a move all the way back up here as high as 9,900, although I don't think that's very likely at this point in time. I think it's more likely that we'll get caught up in this cluster right here and then a strong rejection. So we moved down to basically the 89 moving average was at 8,900 conveniently. And then next we have our 200 exponential on the daily coming in at 85.67. So that was our next step, like we were talking about. Basically we step down, try to come back up, take the next step down, try to come back up. So I'm expecting us to get that move down here basically to that 85.50 range, and then attempt to try to come back up and essentially test that support that we just lost as resistance before coming down to the next set. And you'll see the 200 simple and the 377 and the 528 coming in next at those various levels. Next would be like 80, basically 300 for those two, and then 8,000. And that's on the daily time frame. We also got the daily sell signal, and we have the histogram below the slope line. The slope line is red, which means that not only did we get our cross between the moving averages to the downside, we have a red parabolic SAR. We have red slope line on the TJD TDMACD, and we got the red hard sell signal on the jewel thief. So on the daily, everything is pointing down. And then if we switch over now, actually I want to switch over real quick to the 4 hour. I didn't show this off recently, but I just want to point this out specifically because it's very important. If you look at these moving averages that I use, you can see how often they play like key roles in like reversal or like bottoming patterns. Now you'll often see a wick come past like the moving average, like the 377 here. The wick comes past it slightly, but then finds support back up here. And then same thing when it comes back down to it, the wick comes slightly past it, but you'll see the candle closes right at the 377. Then the wicks are even acting with the 377. Then we finally break down from it, and same thing happens at the 528. The wick comes through it a little bit, but the next wick literally stops at it, and then we get the reversal. So you'll see these are very good for like scalping or reversal trading, or picking just places to take an entry, depending on the direction of the trend, etc., or vice versa. If we're below them, they act as key resistance points, and typically you'll find that those will actually line up with your horizontal supports, with your Fibonacci levels, etc. So but that is why I use those 377 and the 528. Also, they are multiples, so when you switch between essentially like the different time frames, like your 4 hour and your daily, you're gonna get basically like multiples based on those numbers that correspond, so you can essentially see on a shorter time frame what the longer time frame moving averages are doing. So that's why the multiples and fib numbers are so important to use. So but now here you have basically, I'm going to go in now and turn off this tool, and then I'm going to turn on the drawing tools, and just want to talk slightly about this. So we have been basically heading up in this pattern here. We had our parabolic trend lines. We broke down from the yellow parabolic trend line. We were operating inside of this channel right here. And then we just now recently broke down from that channel. What I would typically expect to happen once you break down from a long time support level is a retest of it. I would expect us to come back up and retest that channel. Now look, so that would be that white line right here. You know, it's essentially rising. So it could be anywhere as high as like 9,500 based on that. But now we also started forming this orange channel right here, like descending channel that we were like slowly just moving down in, and then we found support right here, moved up, and we actually broke out of the top portion of that orange channel and closed outside of it. But then we immediately consolidated, sold back off inside of it. So we still have that orange channel that we're operating inside of, but we also started to form. Now there's only two touch points on the top right here, and there's like a few, but I would still consider that only two on the bottom. But we started basically forming like a less severely sloped to the downside, still descending channel. So I would like to see how these two channels interact and where we end up. But you'll see basically the top of the original channel here is going to form like a triangle pattern. If we you know, we're gonna get like pinched in between the two of them, and then at some point in time we'll choose, are we going to now operate within the new channel right here, or are we going to stay in the channel that we've been in, and this was just a false breakout right here. But you'll see also we have a very important you know, the most important right now, I would say, like resistance or support line that we're finding as strong resistance now and closing below. That's at 91.85 level right there, or 91.96, basically 9,200. But we have found for multiple weeks now that we could not get above it on a candle close. We're getting ready, basically, like, I'm sorry, multiple days now. You know, and we're basically getting ready to do the same thing as right here, where if we can't get back above it, we would expect a powerful sell-off down to try and find resistance at some point in time, or support, I'm sorry. So not a ton has changed. Right here in this area, we're essentially just consolidating, and I would expect us to consolidate inside this range for as long as possible, which corresponds not only with the actual channels themselves, but also with the heart lines. So it's going to allow basically price action to operate the longest inside of that range without making up its mind. But I am expecting a violent move still. I do still think everything is pointing to the downside, but it's not unrealistic to think that we couldn't get that move back up here into like that 9,600 range or potentially even higher before we do get that violent sell-off. So, and I'm going to switch out to longer time frame here to the weekly, and we've already spoken about these fibs quite often. The 236 would essentially be our next target. It's like the retest of like the confirmation that the trend has topped out right here. That would be at like 82.75 roughly, and then you know, potential reversal point would be the parabolic green trend line here at 7,100, which would correspond with the 382, or potentially even a wick down to the 0.5 at 63.57, or ideally the 618s down here at 55.50 would be the ideal situation. But you'll see here on the weekly, the histogram did attempt to get back above the slope line, which is red. We did get above it, but now we're failing to stay positive. So now it's flipped back over red, and now both are red, even though the slope is, the histogram is above the slope. They're both going down. So at some point in time, the histogram will cross over the slope line and then drag the slope down at a stronger, faster pace, at which point in time that 7,000 and you know, even lower range is going to look even more appealing. Now we are in the bearish distribution zone right here, and we're losing the slope on our blue right here. So we're essentially like topping out, coming down. It's possible we get the bounce and another move back up before the sell-off, before the violent sell-off. But what we're looking for is essentially this hard sell signal right here when the blue crosses below the purple. So the purple is going to take longer and continue up as the blue starts coming down. When the two of them go to interact for the cross is typically when you'll see like that bounce or another push up, and then we'll look for our divergence to develop before the violent sell-off. And that's the ideal situation. Sometimes it's not as evident, but that's how we play it by ear, or that's how we distinguish between them. So let's turn back on the moving averages. And once again, just like we had spoken about, we're here just getting held up by this 8-period moving average. We came down and we tested the 50. And at this point in time, based on this weekly close, depending where we close, we haven't gotten a close below this 8-period moving average since we got back above it, right here, obviously. So we got all these weeks, basically of positive movement. And now if we get that close at it or below it, it's going to signal to the market that we have in fact entered a downtrend once again. And then looking at the weekly time frame, you'll see the 200 moving averages coming in line at like the 6,000 to 6,300 range, lining up with the green parabolic SAR on the weekly. So it's not unrealistic to think that we could come down here, test that area, and then get a continuation to the upside, find support on them and continue to the upside, and then potentially like retest the top of the range and get that breakout that we're looking for. And then finally, I'm going to switch over to the monthly, as that's very important right now. What I would expect to happen is essentially for us to come down here to that 8-period moving average at 8,600. And, that's where I would expect the close to be at. I can't guarantee that. Obviously, that's a violent move, $500 plus move. But based on moving averages, based on price action and everything, a lot of times that's what it likes to do. We see these violent moves leading up to the close, and then we'll print at one of these key levels. So the key levels being, the top of the range here at 9,500, which is essentially that key resistance that we've been closing at and trying to get above but failing. And then that would make this look like a, fairly bullish candle. If we essentially got rid of the red body and then just had like a wick on top, look like indecision, it would look much better than it looks right now. But then the alternative would be, we come down here basically to the bottom of the previous candle at that 85.63 range, close at the 8-period moving average on the monthly, and then we do just one of these guys where we put in like a green and then we put in like the same red. We put in the red and then we put in like the same green, which happens quite often in, crypto and traditional markets as well. So that's what we're keeping an eye out for, and then based on what happens there, if we come down to that range, the next is going to be that 21. And, based on closes, which obviously at that point in time, you would expect at least a month went by before we closed at that 7,800 range. And then finally, the 50s are the next key moving averages I use, which is going to be down in that 5,500 range. And again, you'll see the wicks often will overshoot the moving averages, but the actual closes themselves will be in line with the moving averages themselves. And that's what we're looking for in this situation. Let's just look at the indicator oscillator. So, and then here we have the monthly. Basically, we got the hard sell signal. We are in a parabolic SAR confirmed downtrend. We do have 3 green histograms in a row on the TJD TDMACD. We don't have enough. We don't have enough time, month-wise, on this exchange anyway, just because the settings are so long for the slope line moving average. So, well, there you have it, guys. Just wanted to do a quick little update. Coming into our, crucial monthly, half, quarter close. I'm expecting quite a bit of volatility and excited for the movements in the markets. It's important now more than ever to protect your capital and be careful with your investments and trades, and look for multiple levels of confluence, indicators, oscillators, support, resistance. Make sure that you're using proper risk management and position sizing, not just basing what you do off of what someone else tells you or you see on someone else's post or Twitter, etc. So, and protect yourself. That's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Take responsibility for your actions. Know that in the near future, that even with all the money printing that's going on during a crisis, I don't think that's necessarily that big of a problem, and is not necessarily going to lead to any changes in basically inflation, etc. It's what happens after the situation that you have to look out for like the debasement of currencies, etc. I think right now the most important thing is to keep the liquidity and solvency that you have, so that you don't get tied up too early in things. Because from my own personal experience, I've been in a situation where something seemed like a really good deal, price dropped on it, I went overboard or went in on something, and then next thing you know, price dropped again, and then a new model comes out and all of a sudden it's worthless, or whatever the situation is, you know what I mean? So it's very important that as the dynamics of the market and the environment change, that we understand that valuations change as well. So with crypto, valuations are basically just the last price traded, essentially. As where traditional markets, there's more of like a mathematic calculation based on like earnings, etc. But it's important that as this X factor situation continues to grow and the uncertainty continues to grow, that these valuations are not going to be as accurate, because you don't know what the future earnings of a company are going to be based on its past earnings, in the way that you could normally calculate things and say, oh, it's typically grown at a 12% per year, so we can expect next year if we continue to grow at 12%, or you could take into account the high and low range, so it could be anywhere from 20% on the high end of growth rate to 6% on the low end, and we can calculate this and get an idea as to the valuation. Well, all that stuff is out the window now. Everything's out the window now. Everybody that's educated and knows everything about science, doesn't have the whole picture. Everybody that's educated knows everything about the economy, fiscal policy, financial, politics, all that stuff. It's all out the window right now, because nobody has ever been in a situation like this. There's no way to calculate not only how the people will react to specific situations, but how monetary policy will adjust, how different countries will react to what one country does, etc. So there's no way to anticipate and see the future of what's going to happen right now. So the important thing, in my opinion, is that flexibility. And that's where like your liquidity solvency like comes in. Like being able to just have that cash when you need it is far more important, in my opinion, than making that extra little like trade or investment or purchase, in times of uncertainty. And with that being said, I'm out of here. Protect your capital, grow your knowledge, and over time, everything else will follow. Crypto Trend Trader, and I'm out of here. Oh, actually, before I go, guys, I love to leave these little things at the end and see who's listening, and it absolutely blows my mind the amount of you guys that listen to these entire videos, or maybe just skip to the end and listen to this one little thing before you peace out. But either way, it's still awesome, and I really appreciate you guys. So I've asked you like previously, where you're at and everything, just to kind of get an idea of my my audience and everything. But I'm interested, what assets like do you trade or invest in? Like, your top 3, let's say. So, real estate, Bitcoin, and, gold, or crypto, silver, and Tesla, whatever it is. I just want a like rough idea, because I'm gonna start expanding some of my technical analysis, like once a week. Do a video that's specifically on like altcoins or S&P or gold or whatever, and maybe just kind of bundle all that up together, or do like little individual videos, but just do a couple little like quick ones where I just basically touch on it. But I want to know what people are interested in. So if you could just do that for me, guys, put 3 assets that you're interested in seeing TA on in the future, that would really help me out. So, Crypto Trend Trader, and I'm out of here.